Yeah, do you like my bottle of mustard in the background?
I see that in the back there. Yes, I was.
That's
on it, but then
Mark
you
Zuckerberg.
did.
He keeps a bottle.
I forgot to do that. Yeah, the Mark Zuckerberg.
So keep my condiment in my desk too. All right, this is episode 19, and today we were talking about Elon Musk's Twitter poll, ESG investing, and we have another lightning round at the end. Over the weekend, Elon Musk posted a statement on Twitter stating, "Much is made lately of unrealized gains being a means of tax avoidance, so I propose selling 10% of my Tesla stock." What do you think Elon's trying to do with this? Is he trying to make a statement about wealth tax, or is he trying to get the market ready for a liquidity event if he needs to sell a bunch of his Tesla stock?
Well, yes. Number one, he's definitely making a statement about Oregon Senator Ron Wyden's proposal to tax unrealized capital gains. We've talked about this in the past. I think it's a really unworkable and terrible idea. But in looking into this situation, Elon Musk is going to have to come up with something in the neighborhood of $15 billion for a tax bill that's coming due that he owes. He's going to have to sell stocks and stock options regardless. So to me, this is something he's already going to have to do, and he's using it as an opportunity to make a statement about the unrealized capital gains tax proposal. So again, yes, I think it's both, actually.
I agree with Alex. I think this is mostly social and political theater, which is very much in the Elon Musk fashion. I think that Elon Musk could take a Twitter poll on whether he should switch brands of toothpaste, and it would make national headlines and send toothpaste stocks soaring to the moon. Like Alex said, from what I've read, it seems like Musk is going to have to sell about 10% of his Tesla shares anyway, just because of how some of those stock options are structured. At the end of the day, whether he sells or not, I don't think it's going to have a significant impact on Tesla, or a big impact on whether capital gains are going to get taxed or not. If he does, then great. The federal government and the state of California will get a nice piece of proceeds through the taxes. But otherwise, I don't think it's that big a deal.
The more I watch Elon Musk, the more I like him. There's several things about Elon Musk that I find attractive, and one of them is that he just doesn't seem to care that much about money. He's really good at making it, but he doesn't seem to be Scrooge McDuck, counting all of his money and worrying about it. He just makes it as he goes. He, in an interview with Leslie Stahl of 60 Minutes, Elon Musk made the comment that some people express themselves with their hair. I express myself with Twitter. And I can't think of a better lesson to learn about economics than to do exactly what he's doing right now. Within minutes after he took the poll and decided that he was going to do whatever the poll told him to do, he was prepared to go either way. He's ready to sell the stock if that's what the majority of people said. The SEC is now investigating to make sure that he's not doing anything that's going to upset the markets. What Elon Musk is this is exactly what he's trying to do. He's trying to upset the market so that people will stop flippantly coming up with ridiculous taxes like this billionaire tax, because these are the things that people don't play through, to the fourth chess move. By having this conversation on Twitter, Elon Musk has been one of the best economic teachers America has produced in a long, long time. So my hat's off to him for pulling this stunt, because he has articulated points about foolish policies that I have not been able to articulate as well.
I don't have much to add. The only thing I would add is I know some Tesla shareholders are upset that non-shareholders of Tesla were probably able to vote in this Twitter poll. But I think that's just a price of holding Tesla. If you're going to hold the Tesla stock, you got to know the company, and you got to know the company's CEO. And he likes to do this stuff. So if you're a Tesla shareholder, you should probably have a Twitter account and be ready for the next poll that comes out if you want to have a say in what Elon's doing. But you're right, 10% is not a huge amount for Elon. Like Alex said, he was probably going to have to do it anyways. And I know Tesla's been down a little bit, but when I wake up to the news that Tesla's down the most it's been since like 2018, it's only down 5, or 7% or something like that. It's not huge. And I think ultimately, I think you guys are right. I don't think this is going to have a huge impact on the stock.
Well, I think it's interesting that Tesla stock's been down, I think 10 times this year, more, at least 5%. So this is just another day in the life of being a Tesla shareholder.
Mhm.
Right.
Well, some of that too is Tesla took a big position in Bitcoin for a while and then sold it off. And I'm not sure if they took another big position, but for a while, their fortunes were trading with Bitcoins, and Bitcoin is very volatile. So
environmental, social, and corporate governance, or ESG investing, has been in vogue for a number of years, and some investors have been prioritizing environmental factors when choosing investments over financial ones. Does ESG have any impact on the environment, or is this just something that's trendy right now?
as far as anything on the environment, maybe marginally impactful on the environment. If if investors are speaking with their wallets and telling companies they want them to invest in like solar or wind or hydro projects over like coal or natural gas or whatever, that does have some impact, at least environmentally. But as far as overall, do I think ESG investing means much of anything anymore? Maybe a lot less than it used to. I track ESG investments on a weekly basis. And when I started years and years ago, there was maybe a few hundred. And before Morningstar changed a lot of their categorization system for ESG funds and ETFs, there got to be thousands of them on the list. And many of them were just incidentally ESG. So increasingly, if you're looking at ESG, you kind of have to go out of your way to find the environmentally conscious ones, or like the Islamic funds that avoid like pork and interest lending institutions. Increasingly, many of them are just kind of accidentally ESG. So I think that the label means less than it used to, but it can still be impactful.
I think ESG investing, as others have put it, is a lot of sizzle and no steak. To answer your question, do they actually have an impact on environmental, social, or governance issues? I don't think they do. A fundamental concept that ESG advocates fail to realize is the lack of appetite for stocks on the secondary market doesn't have a huge impact on company operations. For example, if I'm the Drew Coco mug company and I sell this mug to Alex, and he pays me $5, that's great. Now Alex wants to sell that mug to Tom, but Tom doesn't like me, so he refuses to buy the mug. That does nothing to affect me whatsoever. So really, I don't think it has much of an impact there if you're just not buying ESG or buying ESG secondary funds. Another thing is ESG qualifications are kind of gray and subjective. Take the equity, or the Calvert Equity Fund, for example, has a really high ESG score, particularly in the social aspect. Two of its top 10 holdings are Visa and MasterCard. And these are companies that profit from charging high interest rates and trapping people into debt. Personally, I don't think they are a bastion of honor and social justice, yet they're a high-ranking social fund. So I think ESG is kind of contradictory in that sense too. I think it's mostly a marketing ploy and a lot of virtue signaling when it comes to ESG funds.
I agree with Drew's last point there. To me, having the ESG label is like you're a bottled water company, and so you put on your labels gluten-free water. That it's basically a meaningless statement except for the fact sales. And when it comes to selling mutual funds, gathering assets is the game. And what you're trying to do is you're trying to get a relatively uninformed populace to buy your mutual fund instead of buying somebody else's mutual fund. So if you get that gold medallion that you've been certified ESG, environmental, social justice and governance qualified, you can have a better chance of getting people to invest their money with you instead of somebody else. I don't think it does a hill of beans help in terms of improving the environmental, social, or governance world out there at all. If you really want to have an impact, stop buying goods and services from the people you take umbrage with. Avoiding their stocks, to Drew's point with the mug, is that by the time you buy the mutual fund, you're buying used mugs, but you're not helping the people who sold the mugs originally. So I don't think it's going to have much of a material impact one way or the other on improving our world if you go out and favor buying ESG funds over others.
I think a lot of what ESG is trying to do is they're trying to come up with a way to quantify a company's environmental values into easily discernible metrics, so people don't have to spend as much time researching a company, so they know what they're getting. And so a lot of the thing with ESG investing is it gives them like an ESG score. So like Drew was saying with the Calvert Water Fund, it gets, and I think Alex was saying too, incidentally, you get companies that just naturally have like a great ESG score, like Microsoft or, like Apple or something like that, because most of their business is online. Like Adobe would be a good example. A lot of their business is it's internet based. So they have no physical product. So of course they're going to be a pretty decent ESG company because they're not hurting the environment. And we get some insight into how their corporate, governments, how they treat their employees and all that kind of stuff. But basically they're, before, if and ESG investing has been around long before we had the ESG label, but basically people would just do good old fashioned stock research. You'd go in, you'd read the quarterly filings, and then you listen to the company calls and decide how the company was managing their business, and kind of discern what the company's values are, and then buy the company based on those values. And some people, they didn't like Exxon because they were producing oil, or they didn't like the way they were treating the peoples that worked in their factories in China, and they wouldn't buy, or they would buy companies based on what they found during these quarterly reports and the earnings calls and all that kind of stuff. And by slapping the ESG label on it, you're basically giving it like a score. If you like go into Morningstar, which is a big rating company in the financial world that gives mutual funds different risk scores and quality scores and all that kind of stuff, and they're coming up with the ESG score to tell you how well a company ranks based on environmental, social, and corporate governance standards. And then so you can easily kind of scroll through and see which company has a better score compared to other ones. But you got to be careful, because a lot of the companies, like you can't compare Exxon to Microsoft. And a lot of the companies at the top of these lists tend to be technology companies that have a completely internet-based business. So if you're going to be an ESG investor, you need to be careful, because most of your portfolio is going to be invested in technology. If you want to be a real ESG investor, you got to do it the old-fashioned way and go to the company's website, pull up their quarterly earnings, read through their Q10 and all their other documents, listen to their earnings calls, and decide if you actually want to own it. Or you got to buy a fund company that does it that for you. And not to drop names or do any advertising, but Parnassus has done a fantastic job of doing a lot of this legwork for their customers.
Well, the thing is that we think of technology as being clean, but in reality, they just pollute someplace else. When you have a factory and you got a smokestack spewing all kinds of filth into the air, you can see the pollution right there. But I have seen all kinds of studies that computers eat up an incredible amount of energy, but you don't see smoke coming out of your smokestack when you turn your computer on. So people get this false sense of cleanness. If you really are worried about the environment, get rid of your cell phone, get rid of your computer, get rid of all these other things, because they eat up a lot more energy than people would think. It's just that the polluting is in somebody else's town, so you don't see it or feel it.
I agree. Even electric vehicles right now in batteries, mining lithium is extremely dirty. They use a lot of fossil fuels, and usually under conditions that wouldn't meet ESG guidelines. Yet electric vehicle companies are at the top of the list in some of these categories. I think it's a great marketing ploy. I think it's Madison Avenue meets Wall Street. It makes investing more palatable for investors who find investing overwhelming, or they might find distaste in Wall Street. It's just another market that they can cater to.
Yeah, you guys are absolutely right. And ESG investing, or like environmental investing, would say that, an electrical vehicle company would get a higher score than a company who's just producing gas cars. And so the definition of what is considered clean or what gives you a better score in these rankings is based on basically public sentiment. So, and we've had this conversation before, and I think I may have told you, is that between using fossil fuels and electric, you're basically just trading one set of problems for another. There's no solution. You're just trying to decide which one's better of the two evils. And the ESG will not address that. So if you're trying to save the environment and you're dead set against fossil fuels, the ESG scores that they give you may help you, but just as far as actually benefiting the environment, having a big impact on it, I don't think ESG is going to have much of an effect. All right, so we'll move on to the lightning round of today's show. And for the first question, Mark Zuckerberg is trying to create the metaverse, where he's mixing what appears to be augmented reality and virtual reality for the workspace, so that if you have a colleague in China, you can both interact in the same workspace in the metaverse, as Mark Zuckerberg calls it. Are you going to join Mark Zuckerberg in the metaverse?
Very unlikely.
I don't think I'm going to join Zuckerberg in the metaverse. I don't participate in Facebook as it is now, so I'm not going to rush out to join the metaverse. I think it's cool that it's happening, but I'm not too excited about it.
I'm really enjoying my reality. I really have little interest in Mark Zuckerberg's virtual reality. I can't imagine how it's going to add value above and beyond the reality I'm enjoying right now.
I can see some benefits for it. I don't want to sit there and wear the goggles and just sit in my house by myself, but I'm not opposed to it. I think it's got some value to it, but nothing's going to beat in-person interactions.
Yeah, wake me up when the holodeck is real.
All right.
What I want.
Will Jerome keep his pal when his term? Will Jerome Powell keep his job when his term expires in February?
What's his job? Who's Jerome Powell?
Is the Federal Reserve Chairman.
Okay.
Was that a serious question, or you're just?
Well, for our listeners, they may not know who Jerome Powell is.
That's I thought you were being sarcastic too, as in, what's he trying to do?
Yeah,
he's doing something, but he's not doing it very well.
Not everybody knows who Jerome Powell is.
Or sorry, Jerome Powell's the Federal Reserve Chairman. Yeah, sorry, I thought you were being sarcastic too. I was like, I don't know what he does all day. So, sorry, Drew, what'd you say?
I guess to answer the question, I think he'll keep his job. I guess I don't really know the statistics, but I don't think administrations are quick to change their Federal Reserve chairmen while they're in office. I think he offers a nice punching bag right now. Things are pretty rough in the economy, and I guess maybe they just point their fingers at him.
Well, Trump replaced Yellen with Powell after her first, I believe it was her first term. I don't think Biden has any other better candidates in mind. And Yellen, who's now Treasury Secretary, has endorsed Powell to keep his job. So I think he'll stay put.
The markets are gambling 26% probability that there'll be a change. I think it's more like 75%. Jerome Powell's way too white, way too male to be the woke Federal Reserve governor. We got to put somebody that was way more woke than Jerome Powell.
I don't know if Biden wants to cash in all of his political capital to get this through Congress, though. He could bow down to the woke left and try to get it done, but I think he has other things on his mind right now.
Yeah, the only other person that's competing with Jerome Powell right now is Layla Brainard, and she, if he picks her, he might take some pressure. Elizabeth Warren is no fan of Jerome Powell because of his, she views him as being lax on banking regulations. And Layla Brainerd has basically been stricter on bank regulations and has voiced some concern about environmental impacts in the financial industry. So I would say that she's going to give Jerome Powell a run for her money, as she seems to be like a better fit for the Biden administration. All right, what are your thoughts on GE splitting into 3 companies?
Well, GE has been struggling for a long time now. The way it's being described is these are 3 very focused companies, and as far as I'm concerned, 3 focused companies that are committed to their specific lines of business could be a lot better than one kind of directionless behemoth that GE had become. So I say, why not?
I agree with Alex. I think it's a nice Hail Mary. My only concern is if there's going to be 3 equally poor performing companies instead of 1, but I say, hey, let them give it a try.
Doesn't make a hill of beans difference. The days of General Electric are over. It used to be a titan of industry, used to be a AAA credit company, used to be in the Dow Jones Industrial Average. Those days are long gone. This is a complete afterthought, and the only reason they're covered in it is because it's a story about a has-been company.
Yeah, I think Joe said it, but if they're gonna, instead of being a big conglomerate of a bunch of companies, they might as well just streamline each company and break it into 3. All right, last question is that, or second to last question is that if you could, you can't right now, you can't own either of these companies, but if you could, would you rather own SpaceX or Blue Origin?
Personally, I'd take SpaceX. Their next gen rockets seem like they're going to give everybody a run for their money, including United Launch Alliance. They've been really struggling to keep pace with SpaceX's pricing on launch costs. Blue Origin can't seem to win a NASA contract to save their life. They keep suing SpaceX because they keep losing the bidding process and they keep losing in court. So I would take SpaceX.
I would take SpaceX too, mostly because I like Elon Musk. I got really excited when StockTwits told me that Pershing Square's special purpose acquisition company was possibly going to acquire SpaceX, but that never happened.
Blue Origins is basically just a hobby of Jeff Bezos. Elon Musk sold his house in San Francisco and moved into a micro house right there on the campus of SpaceX so he could be closer to the business. He lives it. Of the 2, I think Elon Musk can take SpaceX a lot farther just because he's more personally involved with it. I'm in with SpaceX.
I'll agree. I have no different opinion. I don't like the way Jeff Bezos has been suing SpaceX. I mean, you're both the billionaires. I mean, why don't you just play nice and try and achieve a common goal? All right, last question. I didn't tell you about this one, but I included just to get 5 in here. I threw one more on there, and the last question of the lightning round is: what is your favorite condiment? So, is it ketchup, mustard, Sweet Baby Ray's? What's your favorite condiment?
Depends on the food, but if I have to just pick the one, I would say a balsamic ketchup.
You do make some really good balsamic ketchup. Now, is that an actual product you can buy at the store, or is that an Alex Musso?
It's a hybrid. It's like one of those suburban homemade things where you take something that pre-exists and you add something else that pre-exists to it. You can't, there used to be, I think you can buy some balsamic ketchup instead of like white vinegar ketchup, but balsamic vinegar ketchup is just so much better.
It's really good. Outside of Alex, I would probably have to go with that one as well. But if I was shopping in the store, I think barbecue sauce, some good old-fashioned barbecue sauce.
I didn't know there was more than one condiment on the planet. The only condiment I use is Tabasco, original red.
And Joe's laughing at Alex's ketchup and balsamic, but once you have that, it's hard to go back. So, but aside from that, mustard, I feel like it gets overshadowed by ketchup, and mustard's my particular go-to condiment. All right, well that's it. That's it for Farm to Markets number 19. Remember, you can smash the like button, as the YouTubers like to say, or share us on Facebook. Otherwise, we'll see you next week.